BIS Commodities. Taking a look at the week in review, we'll start with where we closed out for the week. December corn closed down 4 cents today, or closed down 4 cents for the week at 4.20, and it was the last trading day of the December contract. Also the last trading day for the December wheat contract as well, down 19 cents on the week at 6.18. January soybeans closed up 2 cents on the week at 13.27. Moving over into the livestock market, we had last trading day in December cattle as well. Today down 32 cents for the week at 131.75. And December hogs closed 45 cents lower on the week. Again, also the last trading day for December hogs at 81.22. The big driver or the big newsworthy item this week in the grain markets was the monthly supply and demand report. Historically, isn't a lot of fanfare associated with that report, and that pretty much was the case again this year. The USDA basically takes a look at the demand side of the equation and tweaks it a little bit. And taking a look at the corn S&D, we did reduce our carry out about 95 million bushels from our November report, and down basically from a 1.9 carry out down to a 1.8 carry out. And the increase in demand came from evenly between exports and ethanol grind. Other newsworthy items this week for corn was the continued talk of Chinese rejections of corn vessels due to a certain GMO trait that they are not accepting, and that has probably weighed on the market somewhat. I think the bigger concern moving forward is if the Chinese start to reject DDGs coming out of the United States, then maybe we need to take a much more serious approach to the rejections. Ethanol margins continue to be good. There is some thought that we are backing off margins a little bit here towards the end of the week, but this week proved to be the third best ever week of production, and we did see a large grind this past week. That provides some support to the market as well. As we know, the managed funds are still holding a sizable short position in corn futures, and that may provide some support or some bottom side support to this market, as the thought process is maybe they want to take a little bit of profit into year end, buying back some of those shorts. But obviously with the carryout level still at 1.8 billion, the largest we've seen since the 2005-2006 year, we can't get too pricey to push ourselves back out of that demand side of the equation. Exports have been moving along at a very good pace as well, and we did see a good export number this week as well. Over into soybeans, the S&D report, the trade was expecting a cut in the carryout level. We were 170 last month in November. We did cut our carryout down to 150. Still a tight situation comparable to the previous 3-4 years at a 150 carryout. Pretty much in line with what the trade expected. There may have been some rumors of a much larger drop in carryout, but we did increase exports roughly 25 million bushels. And taking a look at those exports, we're continuing to ship beans, we're continuing to sell beans at a very fast clip. In fact, we're still sitting at over 90% of our sales according to the USDA's number, even with the increase this week of 25 million bushels. The question moving forward is, with this record sales pace, only half of those sales have been shipped. So the question as we move forward is, will all those bushels get shipped? Basically what will China do is, how many of those bushels are option origin, meaning they can come out of South America or out of the United States? Will the Chinese roll those, or will they just flat out cancel them moving forward? The concerns for South America is obviously the logistics problem that they had last year. Will they be able to move beans out? There is some talk that they are a little bit more prepared to handle that as we move into their harvest. So as we're sitting here in a very tight supply here in the United States, according to the balance sheet, South America is off to potentially the largest crop yet. Weather will be the concern moving forward. And to this point, it's been unthreatening. There is some concerns that may arise of dryness if we don't see any rain in Argentina toward the end of next week, but it is allowing them to get their planning finished up. As tight as we are here in the United States with the S&D for beans, from a world perspective, the carryout levels for beans are growing. And also for grains, and world coarse grains are up significantly over previous years. So tighter stocks are offset from larger world supplies, something to keep in mind as we move forward. Moving over into the livestock, hog charts looking ugly. We did see, as I mentioned earlier, the December contract expired today. It is actually trading at a $5 discount to the February futures. It'll be interesting to see how February reacts to that come Monday. There's plenty of talk about PED still out there reducing numbers, but I think for the most part that is being more than offset by the heavier weights. The better quality corn, I think, is offered better finishes, and producers are hanging on. Feeding corn, heavier slaughter weights is probably pressuring this market as much as anything right now. And those heavier weights are also appearing in cattle. Even though the numbers are down, we are seeing heavier slaughter weights, heavier than probably expected, with Tyson backing off the Zilmax injected cattle or fed cattle. The cattle charts still look to be in a grinding sideways range. We are down here testing the bottom end of this range, and we've seen a little pressure today as well. I think one of the main reasons was we did see the choice cutout back off $4.50 just the last 2 days, yesterday and today. Cash cattle has been very light this week. Some sprinkling of 131 out there. A lot of it may materialize late in the day. It is interesting that 8 out of the last 9 years, cash cattle is actually seeing a rally from this point into the end of the year. And that's something to keep an eye on as we move through next week and into the first of the year. Also, the stock market continues to finish on a very high end, and the energies are seeing some pressure this week as well. If you have any questions about these or any other markets, feel free to give us a call here at BIS Commodities at 1-800-373-2525.